Hey folks, thank you for stopping by. This message is brought to you by yours truly, Daniel Morrow, creator of EliteClarity.com for all of your business financing needs, and thatphonesitesguy.com, your resident phone sites affiliate representative. I hope you enjoy this message, and I'll see you on the other side. Cheers. What is happening, everybody? Hope you guys all have been having a great week so far. There we go. I can see me now. So, welcome to another episode of Finance Friday. It's been at the time of this recording, it is the month's end. So, been one of the strongest months yet for me anyways. First and foremost, thank you to all the clients. Appreciate you guys for putting your trust into us, your faith into us, and the ability to the chance, anyways, to earn your business and make stuff happen. And referral partners, right? I mean, referrals are gold, right? That's the greatest gift you can ever give an entrepreneur, business owner, salesperson, right? So referral partners or referral network, thank you. And of course, the team, because there's always a team behind the scenes, right? I was going to turn that into a rhyme, and then I just totally lost it. Behind the scenes, there's always a team making stuff happen, right? Teamwork makes the dream work. So, I mean, you got to give a shout out, appreciation, respect to the team as well. So now that that's out of the way, let's get into it. There's an old Zen proverb that obstacles don't block the path, they are the path, right? What does that mean? That means in life, we're always going to have obstacles, whether it's roadblocks, sand, whatever, that sand that sucks you in. There's always going to be something, right? And it doesn't mean that we've hit the end of the line and we got to stop and all is over, because that's what happened, right? People are like, oh no, I didn't get what I want. Things didn't go my way. The world is over. We're doomed. It's all hopeless. Right? You know what I mean? How many times have you or somebody done that? Right? I make light of it because it's silly. I'm guilty. I do it sometimes too, right? We all do it. It's part of being human. It's part of growth. It's part of life. So this has been coming up quite a bit lately. Qualifying for larger amounts of capital, right? Sometimes, I often talk to business owners who are doing a minimum of $150,000, $175,000 up to like $250,000, $300,000 plus a month, right? And if you're just looking at the daily deposits, or you're looking at your yearly number going, I make like $2 million a year, $3 million a year, $5 million a year. In our minds, we rationalize it that we should be able to get $150,000, $250,000, right? But here's the thing, there's a lot that go into that number on its own. Doesn't, like, it helps, it means something, but it doesn't mean everything, right? And so sometimes offers come back and they're lower than what we want, lower than what was expected, right? On the client side anyways. And we do our best to coach and prepare you guys for not being able to get what you want. But sometimes there's things that happen and things that don't come up, and let's face it, clients aren't always honest with us, right? Sometimes there's stuff that's kicking around that they forgot about, or they were scared to say, or they were hoping that wouldn't come up. And I'll tell you what, underwriters find everything. It's their job to find reasons not to give you loans, right? It's our job as advisors to prove that you can get the loan. So here are some things. Here are some things that you could do to qualify for larger amounts of capital. Increasing your loan capacity, it's simple, but it isn't necessarily easy. And sometimes what plays into this is the type of program that you're trying to qualify for, right? Each program has their own restrictions. They have their own box, right? They all have their own limitations. Following this advice, though, it doesn't matter too much which way you go. You're going to greatly, not only are you going to increase your chances of getting approved, but you're also going to be able to improve your chances of getting larger credit lines, right? And I say credit lines to cover everything. Whatever type of product you're applying for, whatever the dollar figure that they give you is a credit line. right? A line of credit, if they give you $150,000, that's your credit line. Factoring, if you can have $500,000 of receivables financed at a time, that's your credit line, right? You get the point. I'm not going to beat that up too much. So credit, we'll talk about that first and foremost, right? These are in no particular order, so don't think that everything needs to be done in this order. They can be mixed up, whatever. It's just the way that my thought process was going through it as I was planning this video. Credit. Increase your credit score 600 to 680 plus, right? Yes, there are some loans like merchant cash advances. You can have a low credit score of 500, 550 plus, but you're going to be paying out the nose, right? You're going to be paying out your nose and out your toes for that. That's just it, right? Equipment loans, because it's secured against an asset. Sometimes those start at, like, those can be looked at around 530, 550 type deal. But not everybody wants that kind of stuff, right? Everybody wants the line of credit. Everybody wants the term loans. In the States, everybody wants the SBA loans. Well, with an SBA loan, you need a 680, 700 plus credit score in 3 years in business. A line of credit, you need at least 650, 680 credit score. Term loan, you need at least 630 to 650, right? Startup loan, if you're looking at doing some credit card stacking to get yourself off the ground, or you're looking into one of our personal loans, you need at least a 620 to 650 credit score, right? That's going to increase your chances of getting larger capital lines. If your credit is suffering, because here's the thing, a lot of business owners, what we tend to do is we tend to dump all of our capital, dump all of our resources into keeping our business afloat, and we can run our credit into the ground really quickly, right? So I'm not saying there's anything wrong with that, so don't take that way, but there's a right way and a wrong way to do it, right? You don't have to sacrifice your credit to grow your business. If there's stuff that's going on, judgments, liens, whatever, there's stuff that we can do to get rid of those. Sometimes you're just going to have to sit and wait. That's it, right? D&B profile, Dun & Bradstreet. So this is basically a credit profile for your business, right? Some people like it. Some people say it's a pain in the butt because they charge you for every little thing. But it's basically the credit score of your business, and it differentiates itself from personal credit because you can use it to apply for credit without affecting your score, right? Your credit score doesn't take a hit every single time you apply. It increases as you pay your debts, right? As you pay your invoices, your service providers, whatever. But and keep your accounts in good standings with your vendors. But it can also decrease if you're not. There's that. And payments. Are you making your payments on time, right? Because they do still check personal credit score when applying for loans. And if you're making late payments on your credit cards, late payments on your mortgage, bouncing any of those payments, that can affect your ability to get a loan, right? And they're going to see that, and that's going to come up. And sometimes we do get those declines from certain lenders saying, there's a high merchant risk profile or they've got delinquent credit lines. Doesn't necessarily mean it's talking about your business. It could be something on the personal side too, right? And there's different things that also get looked at, and I've covered this. If not, I'll cover it in more detail. But the industry that you're in, how you accept your payments, all of that kind of stuff, right? That makes a difference, and that ties into my next topic, which is banking, right? You need a business bank account. If you're a solopreneur, sole prop, what happens is you still need a business bank account, and it'll just say like your name doing business as, right? DBA, blah, 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 blah. It still counts as a business account. So what you can do, another thing that they look at is your deposits, right? The frequency of deposits running into your account matters, right? Now there's certain industries, trucking, logistics, that kind of stuff. It can be very hard to get loans when you're just starting out and you only have a couple clients because you might only be having 1, 2, maybe 3 or 4 deposits going into your account a month, right? That can be tough. It is what it is. There are programs for that, such as factoring and invoice financing and stuff like that, that are more specialized to those industries. But across the board, the more deposits that you have going into your account and the frequency of the deposits going into your account is going to play a big part of the decision, right? It's going to factor in very well. So to get larger amounts of capital, in terms of that, you got to increase your sales, you got to drive your revenue, and you got to have healthy daily balances. What does that mean? More sales means more deposits. More sales means more revenue, right? The foundation or the backbone, however you want to put that, of any business is sales. That's it, right? You got to maintain your profitability. You got to maintain your margins. So what you can do is, of course, you want multiple vendors. You want multiple service providers. You want to be collecting checks from like as many sources as possible. Now, that doesn't mean diversify your offerings and put more products into the marketplace. Well, although that can help, just getting more people buying your product.
Geographical areas.
Kid, Alexa thinks I'm talking to it. It's tripping me out. Just started going off. Where was I? Sorry about that, guys. Increased sales. Yeah, so that's a backbone of every business, right? The more clients that you have, the more your revenue is going to increase. That's it, right? Sometimes maybe you need to go and talk to your CFO or your controller and figure out what you need to do to increase your margins. Maybe you can make your product or service cheaper and sell it for more, right? There's a number of different ways to go do that. And your daily balances, right? This is important. If you're bouncing checks, those NSF fees are going to hurt you and potentially kill you. If you're running your business in overdraft, I know some of you guys are going, I would never do that. What do you mean? How do you run a business in overdraft? Right? I get it, but you'd be surprised. A lot of businesses out there are running their accounts with negative balances consistently or semi-consistently, right? And that hurts you. So you want to be focusing on healthy daily balances. And it's all relative to the amount of money that you make, right? It's not saying anything is good, bad, or indifferent. But I mean, try and keep your average daily balances at least $5,000 if you're a sole prop. If you're a small business, small, medium business, try and keep it like 10, 15. If you're doing lots and lots of volumes, like hundreds of thousands, $1 million a month, you want to be keeping it in like the tens or hundreds of thousands as best you can, right? Because what they're going to look into what they factor in when they're looking at your banking is they want to know that you're going to be able to service the debt. They don't want you defaulting payments. They don't want you pushing payments back. None of that, right? And the offer that they give you is going to be relative to all of those things. The offer is going to be relevant to your deposits that are going into your account every month, the size of the deposits, the frequency. So that's your sales volume, the revenue that's coming in overall, and how you're carrying balances every single day, right? So drive those up all across the board, and you're going to not only increase your chances of qualifying, but you're going to increase your chances to have a larger credit line extended out to you, right? Also, the other thing that they look at is your debt service, right? It's not really a debt service ratio, kind of is, kind of isn't. I guess you could call it that if you want, but they're going to look at how many loans do you have outstanding, right? Like, yes, merchant cash advances and stuff, it's possible you can have 2, 3, 4 positions out, but once you start breaking into like 3, 4 positions, it's going to be a pain to get any loans. Some lenders want to be the first position, and if they can't buy out the loans that are in front of them and net you at least 30%, they're just not going to do it. They're going to walk away, right? They don't want to put your business in any stress. They don't want to put your business under financial duress and be at risk of putting you into bankruptcy, having you go into bankruptcy or defaulting or anything like that, right? So, I mean, it's frustrating. Like I said at the beginning, obstacles don't block the path. They are the path. They can be frustrating, but it's in your best interest, right? That's it. Part of your job as a business owner is you should know what your return is, right? You should know how much money you're asking for, and you should have a plan for how you're going to flip it and how many times that you're going to flip it to make your money back tenfold, right? You want to make your money back as much as possible. So whatever the interest, the total loan amount is, and whatever the interest, the total payback, how many times over in a month or how many times over the course of a loan are you going to be able to make that back, right? Increase your revenue, increase your stuff. That's going to help you. If we have to go to war for you against an underwriter, right, which we often do, knowing that kind of stuff to make an airtight case on why you deserve the loan and how that's going to benefit your business helps a lot, right? And last but not least, that leads me right into your relationships, right? If you're borrowing a payment history, which I already kind of covered, we're not going to get into too much detail there. Like, how many loans do you have outstanding? What are the types of loans, right? What are the types of credit lines that you have out? And what kind of a payment history do you have with those lenders, right? If you're delinquent on your payments and stuff like that, it's only going to hurt you, right? Frequency. How often are you taking out loans? And I'm not saying that either that this is good or bad, right? Frequency of loans does come into play, especially if you're stacking. So if you're taking out second, third, fourth, fifth positions type deals, you're going to be high risk and it's going to make it that much harder to get loans, right? But if you're consistently only having one or two loans out, you're establishing those relationships with the lenders, you're increasing, you have a good relationship, they extend your credit line when it comes time for renewals and stuff like that, you're just helping your case, right? And of course, diversify. Not one loan program is better than another. They all, like I said, they all have their box, right? They all have their strong points and they all have their weak points. They're all good for something. And sometimes it takes deploying, taking advantage of multiple programs and combining them in a manner that makes sense, right? Diversifying that risk across different programs. So there you have it. Those are my high-level overview tips for qualifying for larger amounts of capital. I hope you guys found this valuable. I sure did. I have a lot of fun making this. If you have any questions or anything, drop a comment down below. Let me know. And wherever you're watching this, don't forget to smash that like button. Leave me your feedback because I value your opinions and I value your feedback. It helps me improve. And don't forget to smash that follow button so you never miss a beat and you keep up to date with what's going on. And at the very least, you're going to be so armed when you talk to a broker or an advisor or whoever for a loan that you can increase your chances of getting approved 2 times, 5 times, 10 times, whatever the case may be, right? That's all I got for you guys. Have a wonderful day, and I appreciate you tuning in. Have a wonderful weekend. Cheers. Thank you for tuning in. I appreciate you taking time out of your busy schedule to spend some time and tune into this message. If you enjoyed this, please show some love with a like, share, or by leaving a comment review wherever you happen to be tuning in. Don't forget to join us on the Facebook group, Business Owners and Entrepreneurs Network, and head on over to eliteclarity.com to check out our financing options. Cheers.